Hey everyone, welcome back to Corporate Decoder, the place where we dive into the sometimes boring but always important world of corporate filings. Today, we're cracking open a Schedule 14A from Mayville Engineering Company, or MEC, and trust me, this isn't just about nuts and bolts. You might even say this is one engineering proxy statement you can't skip. This is a proxy statement, which means it's a document sent to shareholders before a big meeting, the annual meeting, where they get to vote on important stuff. This one's filed directly by Mayville Engineering, so we're hearing it straight from the company itself. Alright, let's set the stage. The annual meeting is scheduled for April 22nd, 2025. Shareholders get to weigh in on things like electing directors, choosing their accounting firm, and even giving a thumbs up or down on how the top executives are getting paid. Think of it as a corporate popularity contest with real money on the line. And get this, the meeting's going to be online, no need to dust off your fancy suit. You can participate in your pajamas. The address for participation is www.virtualshareholdermeeting.com/MEC2025. First up, the election of directors. 2 board members need to be chosen to hold office. These are the folks who are supposed to be guiding the company's ship. Then, there's the rather less exciting but equally crucial decision of ratifying the appointment of Deloitte & Touche as their independent accounting firm for 2025. This is who keeps an eye on the books to make sure everything's legit. Here's where things get interesting: an advisory vote to approve the compensation of the top dogs, the named executive officers. Shareholders get to say whether they think those big paychecks are justified. Lastly, they are even voting on how often they should vote on the executive officer compensation. If you own shares of MEC as of February 21, 2025, you're eligible to vote. Each share gets 1 vote. Simple enough. Can't make it to the virtual meeting? No sweat. You can vote by proxy ahead of time, either online or by phone. Every vote counts, so make sure your voice is heard. To vote, you can go to www.proxyvote.com or vote by telephone at 1-800-690-6903. The control number on your proxy card will be needed. Let's meet the nominees. Jagadish Reddy, the current president and CEO, is up for re-election. Also nominated is Jay Rothman, who's been on the board since 2008 and is currently the president of the Universities of Wisconsin. The board believes Mr. Reddy is qualified due to his senior management experience. The board believes Mr. Rothman's career as an executive, as well as a business attorney, qualifies him to serve as a member of the board. One thing to note, Alan Carlson, a director since 2016, is retiring after this meeting. Now let's look at the directors continuing in office. Stephen Fisher, a board member since 2013, previously worked as an executive at Caterpillar. Robert McCormick, on the board since 2022, retired from Douglas Dynamics, where he was previously the chief executive officer. Timothy Crisson, a member since 2016 and current chair, is chairman emeritus of Baker Tilly, a large accounting firm. Jennifer Kent, a member since 2020, is the chief legal officer of Kohl's. The company wants you to know that all the non-employee directors are considered independent, as defined by the New York Stock Exchange listing standards. This is supposed to mean they're not too cozy with management and can provide objective oversight. The board has a few committees. The audit committee keeps an eye on the financials and the auditors. The compensation committee decides how much the executives get paid, and the nominating and corporate governance committee finds new director candidates and makes sure the company's following good governance practices. Speaking of compensation, the compensation committee uses an outside consultant, Pearl Mayer and Partners, to help them figure out how much to pay the executives. They look at what similar companies are paying to make sure they're in the right ballpark. The board also oversees risk management, making sure the company is aware of potential problems like inflation, labor shortages, and material cost pressures. Got someone you think would be a great director? Shareholders can recommend candidates, but make sure you send their info to the company secretary well in advance. Want to complain directly to the board? You can. Just send a letter to the general counsel. Okay, here's something interesting: related party transactions. The company wants to make sure that nobody on the board is engaging in dodgy deals with the company and getting rich off of it. Any transaction over $120,000 involving a director or executive has to be reviewed by the audit committee. Let's talk about what the directors themselves get paid. Non-employee directors get an annual retainer plus extra for attending meetings. The chair of the board gets an even bigger paycheck. On top of cash, directors also get stock awards, which vest after a year, meaning they can't sell them immediately. This aligns their interests with the long-term success of the company. Now, the audit committee has provided a report. Basically, they've reviewed the financial statements and given them the thumbs up. Time to look at who owns the company. This table shows how many shares are owned by the directors, executive officers, and anyone who owns more than 5% of the company. The company directors and officers have to report their dealings in the company stock to the Securities and Exchange Commission. The shareholders are being asked to vote again to ratify the appointment of Deloitte & Touche, who will be available at the meeting as the company's independent accounting firm. Now let's get into the executive compensation. This is who the top executives are. Jagadish Reddy, CEO, Todd Butts, CFO, and Ryan Raber, Executive Vice President of Strategy, Sales, and Marketing. 2024 was a challenging year for the business. They still managed to have some good results. Key performance highlights for 2024 include net sales of $581.6 million. The net income was $26 million. Based on this financial performance, the compensation committee made a few decisions. Base salaries remained similar to the year prior, but there was a 2.84% increase for Mr. Reddy. It was determined this was a better reflection of the market value for a CEO. The executives also get the opportunity to earn a cash bonus. Actual bonus payouts depend on the achievement of predetermined financial performance goals. Jagadish Reddy made $715,000. Todd Butts and Ryan Raber each made $473,800. The executives earned 135.2% of their target awards, which was based on goals for adjusted EBITDA and free cash flow. The executives also get equity compensation to align their interests with shareholders, consisting of performance stock units and time-based restricted stock units. Executives need to hold a minimum value of company stock, calculated based on salary. The company maintains a clawback policy, so it can get back compensation that was improperly given to the executives. The company has a 401k plan, employee stock ownership plan, and deferred compensation plan. Here's a look at the 2024 summary compensation table for the executives. Jagadish Reddy had $3.6 million in total compensation. Todd Butts had $1.9 million in total compensation. Ryan Raber also had $1.9 million in total compensation. Now, here's a graph to show the pay versus performance of the executives. There are several metrics that go into this determination. The main point of these metrics are to show the relationship between what the executives made and what the shareholders made. The agreements that MEC has with the executives are disclosed here. There is a change in control employment severance agreement with executives. This details what the executive will be paid in the event of the company being acquired. The company has an omnibus plan for receiving equity. The advisory vote is being held so that shareholders have an opportunity to approve the named executive officer's compensation. Lastly, information is being given about the accounting firm for the company and the fees that the firm was paid. Shareholders are allowed to make proposals as long as they are made before the deadline to make them. Alright, so what's the story here? MEC seems to be navigating a tricky economic environment. They're keeping costs down, trying to keep their top talent happy with a mix of cash and stock, and they're minding their corporate governance. A potential weakness would be the reliance on outside factors like a general recovery in customer demand. Overall, MEC looks like a company trying to play it smart and steady, which in today's unpredictable world might not be a bad strategy. Thanks for tuning in to Corporate Decoder. If you found this breakdown helpful, be sure to like, comment, and subscribe for more deep dives into the world of corporate filings.